Good evening, members. Welcome to the study circle meeting on recent changes under the GST 47th Council meeting. Today we have a very renowned speaker, CA Gella Praveen Kumar sir. I welcome you, sir. I request our chairman of panel branch to escort the speaker onto the dais and hand him over with a floral bouquet. Now I request our chairman to give a welcome address.
Dear Praveen Gella sir and my dear professional colleagues, welcome you all for the study circle meeting on recent amendments under GST discussed in 47th Council meeting. Because initially we had a plan for issues in hospitality and service sectors, but moment 47th Council meeting happened and there was a lot of amendment needs to be discussed, very important aspects, so many changes. Even in market also there is a lot of impact on this because of this amendment. Even consumer products also, many things has been changed. But to discuss, we had a session. As a general member, like general MBBS, those who practice all kinds of laws, very difficult to update. But Gella sir is exclusively is a GST expert. Only experts like him can follow GST and update. Otherwise, day in, day out, there will be different notifications, circulars, amendments. It's very difficult to even we practice all, but filing itself is a very difficult aspect because so many changes will happen. Only he can update and he has taken a lot of pain to update and update. He came to update us. We thank you for taking so much time and come as reaching us. Thank you, sir. I once again welcome you. I welcome you all for this session. Thank you. Over to you, Kumar.
Thank you, Chairman. Along with that, I would like to add about 19th and 20th August, we have state level conference. Please do register. I appeal to all the members so that we can plan well in advance. I take a great privilege to introduce CA Gella Praveen Kumar sir, who was a science graduate from Kakatiya University in BSc Electronics, completed MBA from Cochin University of Science and Technology, completed CMA and CA during 2008. He is a visiting faculty at ICMAI Bangalore chapter since 2010, associated with the Board of Studies of ICI for taking online classes for CA final students on GST and customs law. He is practicing since 2010 under the trade name Gella & Co. With this brief introduction, I welcome you again, sir, and I would like to present everyone Praveen Kumar Gella, sir.
Thank you, Chairman. Thank you, Kumar. I thank Bangalore chapter, all other MC members and members present here for giving this opportunity to talk on today's evening on this topic called recent amendments under GST. We have 2 hours, nonetheless we have started 10-15 minutes later. I'll ensure that we take a due advantage of this 10 minutes what we have spent on. So this, before we start with our today's topic, if you happen to see the changes which have come, not everyone is happy with the changes. Monday morning, if you happen to see the newspaper, they said, why is the GST is being charged on milk? Why is the GST is being charged on curd? Roti, kapda, makhan. You see the basic amenities. Milk is a basic essential. It's not a want, it is a need. Why is that you wanted to charge milk? From there, the discussion went on. Packed and labeled goods. Sir, all along you are charging GST on branded goods. Now you have changed your strategy. From branded goods, you have expanded your scope to pre-packaged and labeled. What happens to the small-time business people? How do we understand that particular levy, sugar, jaggery, and many other products were brought into the levy after this 47th council meeting has come into picture. Now, understanding the way the changes are brought in, it is a very tedious job. And second aspect is the compliance is thereof. Couple of amendments are there. If you happen to see these amendments, what you cannot do directly was done indirectly. There is one recent Karnataka High Court judgment, Tugar Ambarish. There is one advance ruling where an applicant asked, sir, I do this residential property, I give it on rent basis. For what? So for rental purpose. For PG. Students who come, who doesn't have residence in the cities, for them I provide rental accommodation. So there is an argument that no, it is not a residential accommodation. Then what is it? They say it is other than residential accommodation, you have to pay GST. There was a discussion went into Karnataka High Court, and Karnataka High Court has given a favorable judgment. You cannot hold a paying guest, PG, as a commercial activity other than residential activity. Now, what is the outcome of that? They have set aside the advance ruling and they have given a favorable judgment. By this 47th GST Council, you will see that it has been amended to make the law implied, to make the law effective. And one of the other proposition, renting of your residential dwelling unit to a business unit. Now, when we come to the respective sites, we will understand what are the nuances we are going to have, what are the issues we have in terms of dealing with this particular aspects. So friends, today's topic I will be touching upon the rate changes for services. I have not picked all the list of services, the relevant important services where the rate has been changed, what is the impact. And also along with that, exemptions have been withdrawn. Wherever this services related exemption has been withdrawn and reverse charge was proposed, we will have a 360 degrees approach in terms of legal complaints, in terms of accounting issues, in terms of departmental audit purpose. Also I have touched upon a few slides with respect to understanding this pre-packaged and label activity. Now, you have been seeing in media that pre-packaged and labeled is going to be a misnomer. I have taken few examples for us to understand how this has to be understood. How practically businessmen are going to apply this as a tool for marketing. We will see an example to understand this aspect called pre-packaged and label. Interest under 50, subsection 3. This interest was retrospectively introduced way from 1st July 2017. Input tax credit wrongly availed and utilized. This was one new concept which was brought into GST under 15 subsection 3.
If you avoid and not utilize.
Avail and utilize. Avail and utilize.
Because there is other part of court judgment is there.
Avail.
Not utilize.
Or utilize, baradilla. Avail and utilize, it will come into picture. And there is one notification called 13 of 2022. This is little important with respect to your audits under GST, with respect to refund applications, also with respect to your recovery of refund. Finally, I have one slide to touch upon recent amendments under 3B. So this is our coverage for today. Now, to start with, there is a works contract. Like last week we had a session on works contract. As we understand, like when the discussion was happening, there was a debate happening. Is it 12%? Is it 18%? Is it 5%? So by the time we could understand what is a works contract, what is the rate applicable, notification has come which has changed the entire understanding. So this entry 99554, this deals with your construction activity. 1st Jan 2022. 1st Jan 2022. This was one important day where government entity, government authority. There is a term called government authority, government entity. These two terms were withdrawn from the rate notification. So what they have done, any works contract done, construction of a canal, dam or school building, any building which is not for commercial activity, there are list of activities where the rate of tax was prescribed at 12%. And earthworks, the rate of tax is 5%. So what they have done, 1st Jan 2022, they have removed this term called government entity, government authority. What was left over? Central government, state government, local authority, union territory. These four are left over. Now, the moment I have withdrawn government authority, government entity, there was a lot of debate or analysis started working upon. Sir, I get a contract from Indian Railways. Should I call that as a work done to central government? Should I call that as a work done to government authority? So I got a work to be performed to SEBI. Now, this is how the issues started propping up. The moment government authority, government entity was removed, the focus given to GE was lifted. So people started understanding what do you mean by central government, what do you mean by state government. So to cut down this particular analogy, with effect from 18th July 2022, what they have done, they have brought amendment to this entries. Entry number 3, entry number 6. Entry number 3, entry number 6. These two are the entries which are relevant to central government, state government, local authority, union territory. Entry number 9 is relevant to a subcontractor. So what they have done, whatever services you are doing to central government, state government, instead of 12%, now that has moved to 18%. There was an increase in my rate of tax from 12 to 18%. So why was that particular move brought in? 1st Jan, you have lifted out government authority, government entity. 18th July, you have lifted out central government, state government, local authority. Why is that so much of confusion? You should have done it on 1st Jan 2022. You should not have waited till 18th July to bring this particular change. So, one particular point we have to keep in mind is any services rendered to central government, state government, local authority or union territory in relation to works contract, the rate of taxes from 12 jumped to 18%. So 6% there is an increase.
Earlier one notification is there in this regard, December 2020 or?
Change for government authority and government entity, effective from 1st Jan. 1st Jan. Now, the other entries, CG, SG, LT and LA, UT, this was lifted out. Now, uniformly for all services, 18% is lifted.
No confusion.
No confusion.
That means any contract works,
Any works contract,
anybody, any
18%.
person,
18%.
18%.
18%. And a subcontractor who is doing the works to a main contractor,
Yeah.
even that, from 12 it has gone changed to 18%. Now, that is one good point they have brought in.
PWC or PWD, all those things
Yeah.
works.
Everything 18%.
So no doubt or no 12% that notification Gella or
Next slide there is one more confusion called earthworks. We will understand earthworks.
This is prospective only, sir.
This is prospective from 18 July 2022. 18 July 2022. So here, now whenever there is a rate change, what is important for us? Raising an invoice, works contract. So what will happen? I have received money in advance. What will happen? I have done the work. What is it? I am going to do the work later point in time. Those aspects I have to deal with my section 14. Transition provisions. So whenever there is a change in rate of tax, I have to carefully understand my section 14 to see how these rates are going to get affected. So in addition to that 18%, we have one more bracket called 5%, called earthworks. So entire your works contract, which is in relation to construction, your construction service, there is one entry, which is entry number 7. This entry number 7 deals with your earthworks. What it says, in a works contract, which is a composite supply, the value of earthwork should be exceeding 75%. Then I call that as an earthwork, where the rate of tax is 5%, which was increased to 12%. Barring this particular entry, the rest all works contract 18% is a standard rate of tax. Now, the entry subentry serial number 10, that is applicable to subcontractor. So when it is changed to principal, here the subcontractor has to charge 12%. Section 14 I have not illustrated here, but we need to keep in mind with respect to transition provision. So I have raised a RA bill, running bill, after the change in rate of tax. Money is going to come after change in rate of tax. Should I charge old rate of 12%? Should I charge 18%? We have to instruct the client, because of section 14, you are supposed to bill at 18% and recover that money. So I have been billing at 12%, my government party is doing 12% only. they have done TDS at 12%. We have to suggest them that section 14 does not permit you to bill at 12%, rather you should bill at 18%.
Ongoing projects will get affected.
Definitely yes.
Awarded long back.
Definitely yes. Working capital issues, convincing this particular
Government
government authority,
Yes.
all that is the challenges we have. Next, accommodation, food and service 9963. Now this is one entry which made a turmoil in the industry. Nil to 12%. What they say? This particular 9963 which talks about your accommodation service. There is a term called above rupees 1000 per day. When we talk about hotel accommodation, any services rendered in relation to hotel accommodation, the per day tariff is above 1000, less than or equal to 7500, 12% is the rate of tax. This less than 1000, the term was omitted. From when? From 18th July 2022. Now, there are many hotels who have this room tariff which is less than 1000. If you see type 2, type 3 cities, they have 800, at best 900 is what they charge as a room tariff. All this hotel accommodation, though the turnover is more than 20 lakhs, they are not registered at GST because they have been enjoying the exemption. So those assessing whose aggregate turnover exceeds 20 lakhs, now it is a time for them to get registered and start charging GST. What is the rate of tax? 12% is the rate of tax. Now, for recommending registration, so should I check the current year turnover? Should I check the previous year turnover? So previous year turnover is 45 lakhs. From 1st April 2022 till 18th July, it is just 8 lakhs. Should we recommend to get registered or should I wait for the current year to exceed 20 lakhs? What do we say? Should I look at the previous year or should I look for the current year?
You have to look for the current year.
Current year. Previous year, though it exceeded. In the current year, look for your aggregate turnover. The moment it touches section 22 limit 20 lakhs, then you get registration and charge GST at the rate of 12%.
Previously, central excise decision also is there. No? Previously, some exemptions or lower rate of tax has been given under central excise design. There it says that once your turnover exceeds particular limit, then only to charge
yes. Now, having registered the GST, what all input tax credit they have not taken, they can take. Now, with respect to hotel, wherever we advise the clients that boss, you are supposed to get registered, look at their input tax profile. They have inputs, capital goods, input services. Now, input services, from the day you register, you will take the input tax credit, not a challenge. What happens to inputs, which are in stock? What happens to capital goods, where I have capitalized or I have recently purchased? Let's take an example. So, there is a hotel where they have purchased a DG set. The cost of DG set is 10 lakhs. On DG set, assuming 18% is GST, 1.8 lakhs is going to be the GST. If I have accounted the DG set in the current financial year, where I have not capitalized the tax along with the 10 lakhs, then I can claim the input tax credit on capital goods. So what if this DG set was purchased on 1st March, I have capitalized this credit of 1,80,000, claim the depreciation. I cannot claim the input tax credit on that particular DG set.
What thing is that? Safari International Judgment is that.
Sir, Safari is in relation to works
contract. Avoiding the input credit on a hotel industry because consultation only will come into the
They don't block the input tax credit hotel industry. Only in relation to works contract there was a blocking.
75.
So they, again, it is a challenging role. Should we claim on works contract or should we not claim? It is a matter which assessee has to take a call. Cost benefit analysis, litigation. The moment you go for advance ruling, they say it is not eligible. They definitely give an advance order. You have to go to the High Court to get a case.
High Court, if you go to High Court also, say that it is matter is pending within before Supreme Court.
So you will fall in the queue till the matter gets against.
I cannot use a judgment.
So it's a matter of working capital and the appetite, risk appetite of the assets.
So even what you have raised upon the detachable assets, non-detachable asset concept you are going at, I think so.
Works, other than, I'm talking other than works contract. Other than works contract. Now, by doing this suggestion for input tax credit, there is a section called section 18, which says how do I take input tax credit, where inputs are there in finished goods, semi-finished goods or raw material form. So section 18 is what we need to look upon. Now, the moment this term less than 1,000 rupees per day was removed, there are many advanced rulings where the people have gone for a clarification. Sir, I do run a paying guest. I do run a short-term accommodation service. Now, should I charge GST? Then they advanced ruling say you are charging 10,000 per month per student. Now, this particular 10,000, if you calculate per day, it is less than 1,000 rupees per day. There is entry called entry number 14 in notification 12 of 2017. Based on that entry, where there is an exemption, if you have letted out any particular place, where per day the room tariff is less than 1,000 rupees, you need not charge GST. So many advanced rulings have given a judgment saying that because your per day tariff is less than 1,000, you need not charge GST. Now all those advanced rulings, it is going to have an impact with effect from 18 July 2022. Now in that advanced ruling, if you examine, two questions are asked. Sir, I run a PG. Should I enjoy the benefit under this exemption notification? Should I charge GST? So they are, most of these advanced rulings, they have not discussed on residential aspects. They have discussed on per day tariff. Based on per day tariff, they say because it is less than 1,000 rupees per day, you need not charge GST. Because there is an amendment, this entry 14 was removed from 18 July 2022. So what happens? All those entities where they have got a stay on a decision from advanced ruling, they should charge, start collecting GST. So what happens? There is one Karnataka High Court judgment, Tushar Amresh. This particular Karnataka High Court judgment, they have said accommodation which is provided as a paying guest for students or working employees, that can be considered as a residential dwelling unit. Taking a shelter under residential dwelling unit, can I not enjoy the exemption? Answer is yes, provided wherever we have got a decision, where earlier the decision is based on this entry number 14. Now we have to redirect back to High Court, filing a writ petition, getting a rectification saying that it is not covered under entry number 14, it should have been covered under entry number 12, which is in relation to residential dwelling unit. So this is one particular caution we have to recommend to all the clients where there is a exposure.
In this case, suppose there is a plan sanction for the plant is or area reserved for the residential purposes.
Okay.
But he is running PZ.
Is running a
PZ. Because as per Act 4, it is a purpose of that this one is resident. So basically that class itself will be exempted. But he is running PZ.
Correct.
He is just to be charged GST. Which is what is your opinion?
Sir, it is not a commercial activity. Now when you look at the residential dwelling unit, there is no definition as such. There was an education guide issued under Service Tax Era 2012. As per the education guide, they say your residential dwelling unit is nothing but a residential accommodation which excludes hotel, motel, inn, guest house or boat house where it is meant for a temporary stay. Now in case of a PG, it is longevity is there compared to a hotel. A student who comes for staying, at least a span of 1 year to 3 years, he will be staying. So I differentiate in that particular arena, it is not for temporary stay. Looking at this particular education guide, we can call that PG is a residential dwelling unit. Considering it is a residential dwelling unit, entry number 12 is intact.
No, if it is a plan sanction is PZ based.
So plan sanction, permission from BBMP, this is all your what you call LA laws related permission. What is the intent of that? Intent, is it like a hotel? Is it like a temporary stay? Now in respect to GST law, when you look for definition, after looking to Service Tax Era where there was a definition given, where they have differentiated a residential dwelling unit compared to a hotel. And the term was referred to your temporary stay. Because in a PG it is not meant for temporary stay, I would say that it is covered under a residential dwelling unit. So all PGs, we have to give a recommendation. Boss, go to this High Court, Article 226, file a writ petition, get this amendment with respect to entry number 14 to entry number 12. This is one aspect we have to suggest.
Suppose common kitchen is there, separate kitchens are not there for each room.
Okay.
There some litigation comes.
What is it used for? What is the purpose of that?
Residential means some separate kitchen.
So residential doesn't mean that there should be a kitchen. They haven't defined that a kitchen is must. They have just differentiated that it is for it is other than a hotel. It's a place where people stay, which is other than a hotel, motel, inn, guest house, boat house, where it is meant for temporary stay. Like example, when we go to this North Karnataka, where for sightseeing and all, we have this paying guest small houses which are converted as a beach, where kitchen is given for family to come and stay. I consider that as a hotel sort of thing which is meant for temporary stay. It is not a residential dwelling unit. Just because kitchen is there, it does not get classified as a residential dwelling unit. This is my take on RW.
Okay.
Now, with respect to your section 14, now this is one particular slide most of us are aware, where services are rendered on or after the rate change comes into picture. Now, in this particular case, assuming that the services are rendered after rate is changed, let's take an example. All these OYO or Make My Trip, etc., they have a tie-up with these hotels. They sell the hotels well in advance. Now, what happens, like, they know first to 15th holidays are going to come, or this day to this day there is some special, like what you call some auspicious days a day where your hotel stay is very less. They try to market those days where there is a volume, where there is a lesser volume. Assuming I am a hotelier, I have sold 15 days this occupancy to OYO. The moment I have sold, OYO is going to say that Praveen committed. First to 15, I am going to give a guest. If no guest is there, I am going to pay for the tariff what I have convinced agreed upon. Now that is the case where I have raised the invoice, I have received money in relation to that particular period. So this particular slide, when we apply section 14, services are rendered once there is an occupancy. So assuming after 18th July 2022, the occupancy is going to happen, where tax invoice is issued prior to occupancy, payment is received after occupancy. Two of the events are happening after change in rate of tax. My time of supply will be date of receipt of payment, that is after 18th July 2022. Assuming, sir, I have raised a tax invoice on say 1st of July, I also have received payment on 1st July from OYO. But occupancy is going to happen from after 18th July. Because two of the events are happening prior to change in the rate of tax, my time of supply shall be earlier of date of receipt or issuance of a receipt of a payment. Earlier of these two, time of supply will be determined. So what if I have received money in advance as a customer, I have given a token advance of 10,000. For that, I have issued invoice after 18th July. Accommodation is going to get occupied after 18th July. Because two of the events, issuance of invoice, rendering of service, two events are happening after 18th July, my rate of tax 12% is going to come into effect. So I have to tell to the customer, sir, at the time you booked the room, there was no GST. Because there is a change in the rate of tax effective from 18th July, I have to charge 12% as GST. Now this is one particular suggestion we have to keep in mind. All this, what you call resorts, there is availability of GST. Wherever there is a tier 2, tier 3 cities where there is a room booking with respect to non-applicability of GST, this is going to be a burden, this is going to be a additional compliance with respect to hotel business. Now, another one important entry. Now, if you would have seen this place called Dharmasthala or TTD, the historical places, the Hindu places, we have a community-based accommodation. Like if you visit Andhra or Telangana, like Kamas or Naidus, Reddis, Brahmins, each based on the caste, there is a chaudhry, there is a satra. Now, every religious places, we have this what you call community-based satras. This particular chaudhries are going to get affected because of this entry 14 which was removed after 18 July 2022. Let's take an example. So there is a place called Dharmasthala. In that particular place, there is, I will not name the religion, there is X-religion, community-based chaudhry. So when I walk into that chaudhry, only if I am from that religion, only if I am a member, I will be permitted to get into there as a what you call accommodation purpose. Once I check out, they say, sir, it is what you call trust under section 12A or 12AB. We are collecting as a donation, not as your rental accommodation sort of thing. It is not subjected to GST. But when you go and ask, sir, it is like a rental accommodation. If I stay for 2 days, per day assuming 300, you are collecting 600. They were taking a shelter all along saying that, so per day less than 1000. I need not pay GST. Now that particular entry has been lifted with effect from 18 July. So those places, all those shortages are this satras who have been collecting rental charges, accommodation charges, they are going to get exposed. Most of these shortages, are they aware of this? Most of them have cash and carry sort of thing. You go, pay in cash. Most of the time, this is a card is not working, or this UPI we don't accept. No. Those places where manual system is there, updating them with respect to compliance to GST, charging 12% GST is going to be a tedious job. All
various accommodations are there.
We have to look at this thing. Like example TTD. Now TTD, any person of any religion can do a booking. For TTD there is no issue. There is a separate religious based matters. Those have an exposure. So all those have an exposure. Now you visit Tiruvannamalai, you visit Dharmasala, all these religious places we have an exposure. So this is one entry where because of this per day 1,000 rupees has been changed.
So one more judgment is done. Previously, because there is a vast community, and based on that community.
Sir, I have put the language. Renting of presence of a religious place meant for general public, underline the term general public, owned or managed by any entity registered as a charitable or religious trust under 12A or 12AB of the income tax. If you have used it for general public, like your income tax 12AB, you get only if it is for general public. If you say it's only meant for this religion, they will not give you
religious means will not give it out.
So that's how
particular religion they have taken out in the High Court because my number of population or number of this one very high.
Litigation
matter.
Do we have that muscle strength to go and dispute that we have to address leave it to the client? So this is one particular entry number 13. I would recommend you give a direction if you happen to be any committee members for these organizations. Now, this passenger transport service, which is by the roadways, earlier it was under 18%. Now specifically they have brought it to 5%. Transport of passengers, transport of goods. There were two ancillary entries. All along 18% was the GST on these two entries. Now 18% was reduced to 5%. Earlier input tax credit is allowed on all. Now it is restricted only to input services. Now, GTA, Goods Transport Agency. This is one sector, 2014, 2004, 2004. Under service tax era, when there was a proposal to levy service tax on GTA, all over India there was a strike saying that all transportation was paralyzed. They say if you want to levy service tax on transport sector, they are not going to support. The government well thought about it and said, don't worry, we are not going to levy service tax on you on a forward charge basis. We are going to bring it on a reverse charge mechanism. Why they have proposed? To please this particular industry. We understand that you are unorganized, you are not having enough sufficient manpower to support administrative, etc., etc. Now all that has gone for a toss with this particular amendment. What they have done? GTA 9965 was given in a new author from 18 July 2022. So they have said, look, I'll give you an option. You decide, you want to charge GST on a forward charge basis or you want to continue the recipient to pay tax on reverse charge basis. Who asked this government about this entry? I don't think the transport sector went and made a recommendation to the ministry saying that please bring in a forward charge basis. So they have tested this particular sector. You have a choice. You either pay 2.5 to 2.55% without ITC or 12% with ITC. Shall I do that particular decision? So what they have done, I'll give you a choice. You want to register and pay GST, there is a form called Annexure 5. You fill this particular form, come to jurisdiction range office, give a declaration that you want to register under GST and charge GST on a forward charge basis. One nation, one tax, everything is online. Now you have to go and meet the jurisdiction officer. Who is the jurisdiction officer? State or center? Sir, I have given to state. You will get a call from center saying that no, it is not state, it is under center. So you have to find out your jurisdiction officer, go and give a physical submission and an annexure file. So this is one new entry which was proposed.
Sir, RCM is an additional work only, no additional revenue it will generate.
There is no additional revenue.
Only additional work.
Additional work for professionals. Employment opportunities. Self-employment.
One more
Not
thing,
only professionals, for employees also nuisance, for
Big nuisance.
regular employee also.
There are a couple of challenges. Next slide we will discuss what sort of challenges are going to be there.
Professional, nothing, no income is there out of this.
Definitely not, sir. Sir, that-
Only accountants, those who are maintaining books of
imagine the
accounts, for
software,
them, headache.
imagine the industry, how they are going to struggle with this
Yeah.
particular amendment. Take example of VRL. Across, say, 28 states and 9 union territories, if they have been registered. Now what they have to do? They have to go to the respective jurisdiction office, fill this form, annexure file, get an acknowledgement. There is a timeline within which you have to go, declare yourself and get a permission from whom? Jurisdiction officer.
This only gives additional income to the departmental auditors.
That's all.
Yeah.
All along you are not
Yeah,
meeting,
yeah.
you are not seeing the officer. Now they have made a way to meet the officer.
Yeah, that's all. RCM is a good revenue for them.
but RCM will be paid only for specified people. In case of general
Specific
purpose,
people. Specific people.
to use out the general purposes of GTA, it's a forward contract. He has to charge all the customers.
Yes.
There is a revenue will be higher side.
It is again GTA. If it's charging, it is exempted for other than for personal use.
Other than personal.
Now they have given for financial year 22-23, that is current year.
Sir, B2C, it will not apply.
B2C will not.
There is no revenue generation. See, B2B means no revenue generation, additional work only. Giving from right hand,
Left
paying
hand.
from
Take it from left hand. That's all.
Yeah, that's all.
It is just a payment of tax and claiming the ITs. Revenue neutral transaction.
Additional work for the staff.
Additional work for the assessee, additional work for the department officer at the time of departmental audit. So they have prescribed that whoever is charging GST, who is willing to, who happens to be a GTA, who wanted to charge GST on forward charge basis, on or before 16th August 2022, you have to give a declaration. Now, look at the dates. 18th July you have brought this amendment.
Yeah.
So why 18th July? You could have brought on 1st July. You could have brought on 1st August. Who asked you to bring on 18th July? So you have brought on 18th July. Look at the date, 16th August. 15th August and say Independence Day, they have brought 15th August as a day. Why do you have to bring 16th August? What is the logic behind that?
30 days from the date of
Now if you understand, there is a rule 47 which talks about issuance of invoice within 30 days. To complete it that 30 days now, from 18th July within 16th August you have to give a declaration. This is all the logic set behind this days. Under Rule 47, provision of service, there is a time limit to issuance of a tax invoice. From the date of rendering service, within 30 days you have to raise a tax invoice. So if you calculate from 18th July, this was introduced on 18th July. So from there, 17th August, my 30 days is getting over. So on or before 16th August, they wanted this declaration to be given. So that the tax, whatever you want to charge, you charge and pay to the government. To issue, like whatever services you are rendering on 18th July, the 30th gets over on 17th. So one day prior to that, they wanted to get the declaration from the GTA saying that you want to collect tax on forward charge basis. Your time limit to issue a tax invoice falls due on 16th. So this is the logic behind these dates. Now why you want to bring everything in bit of the thing? 1st July 2017 you brought in GST. Assessment 3 months back era, 3 months, 9 months under GST era. You started getting income tax notices saying that 26 days shows this is the turnover. Your GST annual report shows this is the turnover. Why there is a difference? Suppose you have a 9 months turnover. You never see my annual return. You never understand my GST turnover. You never understand 26 days.
Sir, now we are discussing about the rental income.
Sir, I'll touch upon that, sir.
Now RCM also has come for rental income.
Yes, there is a slide. I'll touch
Same
upon
to
that. It is there. I'll touch on that. Now, for every financial year after 22-23, on or before 15th of March, the GT has to give a declaration. So it's every year, like your year one, erstwhile era. When you file your excise return, take a printout, go to the range office, submit them. Under service tax era, take a printout ST4, go and give it to the department, ST3. Now, that is how this declaration has to be given. composition, I have an option to file electronically. Why is that this declaration not made electronically? Why do you want to have physical declaration? There is no logic for that. So assessee has to fill the form, go to the range office, get the acknowledgement that I have decided to pay tax on forward charge basis. Now, another disaster. We had this GTA concept where any services in relation to GTA, where in a single carriage the value of consignment not exceeds 1,500, no need to pay tax on reverse charge. Similarly, any services rendered in relation to a consignee, if the value of consignment does not exceed 750 rupees, no need to pay GTA. Threshold of 750 rupees per consignee, threshold of 1,500 for all the consignments. We need not pay GTA on reverse charge. Now, this particular exemption is also withdrawn. Now, the good advantage from this particular entry is whatever GTA bills I am going to get, I have to advise to my client. Is the GTA forward charge? Is the GTA under reverse charge? If the GTA is under reverse charge, put it to one GL. Entire GL at the end of the month, take that amount, pay tax of 12% or 5% on reverse charge basis. Look at your place of supply, pay respective IGST, CGST, SGST, KL. Now earlier, GST exemption 750, GST exemption 1500, GST forward charge, GTA reverse charge. I need to have so much of verification. Going forward, whatever expenses you have incurred on in relation to freight, no need to examine the 750 or 1500. Start paying your GST. Now this is one another headache which is gone. Now RCM is not applicable where GTA has decided to pay tax on forward charge basis. Now the question comes, sir, I am a company, I am a factory. How do I know that GTA is going to charge on forward charge basis? How do I know I should not pay on reverse charge basis? Now, for that, the department says Annexure 3. There is a declaration. The GTA on the tax invoice is going to give a declaration in Annexure 3. I, being a GTA, I have given declaration to the government, to my range office, that I will charge GST, you don't pay tax on reverse charge basis. So, on the basis of this Annexure 3 declaration on a tax invoice, I will take a call. If it is on forward charge basis, it is not on forward charge basis. Now, isn't it this working capital arrangement for all these non-compliance assessees? You collect GST of 12%, you never pay the GST to government, and the government officer comes for the audit. Baba, this fellow who has issued a tax invoice, he didn't file his GST at 1, he didn't pay tax in GST at 3B. Why shouldn't he require that particular tax? Now, all this is a circus which we were aware which was happening. And earlier service tax era, like this manpower supply. Manpower supply for security or manpower supply for housekeeping, whatever it is. If the manpower has not paid tax on forward charge basis, department started sending notices to the recipient. Boss, this supplier has not paid tax on service tax. Why don't you pay? Similarly is your GTA case. Assessee has given declaration in Annexure 3. In the invoice, he says, I declare that I have taken permission. Now, how do I know the genuineness? I being an assessee, how do I know the genuineness of this particular declaration? So
once he has given declaration, he would have charged tax, no GST.
Sir, he has charged.
Yeah.
Assuming I am a overnight runner, I put the name ABC. I change it to XYZ. I change it to PQR. I have given a bill saying that this is my GST number, 12% is GST, this is Annexure 3. I never saw my range office to give that Annexure 5. I never gave that Annexure 5. You don't know that I have to do Annexure 5. Just looking at my invoice, you pay tax to me. 2 months gone, 3 months gone. After that, you realize that this fellow is a defaulter. Transport sector is very cumbersome to catch hold. Reason, they have every state different place of business. They don't have a permanent place of business.
I have a question, sir. TCM, Transport Corporation, they do forward charge billing. So the existing ones also should follow this?
Yeah. They have to give a declaration in Annexure 5 to the respective jurisdiction office. In the invoice, Annexure 3, there is a declaration, Annexure 3. They have to mention that I have taken a permission to charge GST on forward charge basis. You need not pay tax on RCM. That declaration they have to give.
Going there.
Going in, 18 July.
Yeah.
So any bill received from 18th July, they have time limit till 16th August, should not ask them. You keep paying to them. 16th August, you see whether he has given the declaration.
Right.
Now, GTA opting to pay tax, like composition. Sir, once I am under composition, I have registration Andhra, I have registration Telangana. Can I opt for regular registration? Something like that. GTA, assuming in Karnataka he decided to go for forward charge. What should be done in Telangana? What should be done in Kerala? There is no guarantee that in one state you give a declaration, other states you should give a declaration, like your composition scheme. I can decide as a service provider, in one state I will pay on forward charge basis, another state I will pay on reverse charge basis. I'll give an example. Take example of this Amaron batteries or Excite batteries. Amaron or Excite, they have close to 300 vendors who are GTA service providers. Very tough to manage these particular service providers. Reason, South India, this 300, more or less every state you have that 300 odd GTS. How do I track it in my accounting software? Assuming LMR, there are LMR road transport. This LMR road transport has given a declaration for forward charge in Karnataka. LMR road transport in Kerala has not given a declaration. I have to pay on reverse charge. Now I as an accountant, for Karnataka I have to take the ITC. For Kerala I have to pay on reverse charge basis. So how do I track? Simple law, you should track.
So two different GST numbers will be.
Sir, imagine the accountant, sir. You are professional, you know. Imagine the accountant. For him, LMR transport means LMR transport. That's all.
Human errors are bound to happen.
Plenty of. Where they have the domestic strength, they prefer forward charge. Where they don't have manpower, they say, I'll go on reverse charge. I don't want to give a declaration. Validity of Annexure 5, this one point. Sir, I have got an invoice. Invoice nalli Annexure 3 declaration kottidru. I am a GTA, I am going to charge you on forward charge basis, you pay tax to me under. But how do I trust this Annexure 3 declaration is right? How do I know? Yes, sir, he has to give a declaration Annexure 5. It's a manual. Now manual, there is a kappa. He is scanned, black and white. How do I know it's a genuine or not? If like GST portal, when I check the GSTM, it shows registered cancel. It shows composition or SSZ. There is option for me to check that. So these are all the practical issues.
So later on, if it comes out input tax, it will not, he is not deposited, so automatically it comes as a
To be, again you will wait for 1 month. Sir, to be nalli barta illa ITC tagolakagalla. Now again I am blocking of your working capital. Sir, I need this service provider. Say sales and marketing. Take example of this industrial supplies. Compliance is important for an accountant. For businessman, business is important. Sir, book or book, this delivery should happen. Whichever transport is there, get that fellow, put on the job, get the deliveries done. Sir, he is a defaulter, no issues, pay the tax, pay the freight. That's important for the business.
That's when you recover it.
Now, it's all practical issues to recover the input tax which was not paid.
PCI is a regular defaulter.
So many others. Not to name the brand, many others. Rate change for financial. Foreman or chit fund, where we have this gentleman who is called as a foreman who collects this commission on the chit. His rate of tax from 12% was enhanced to 18%. What is the reason? What is the logic why they want to touch this foreman, poor fellow, from 12% to 18%? What is the reason? No idea. So they have increased the rate of tax and they say, earlier you were getting only input tax credit on services, you enjoy all the credits. What is there for him to enjoy? No. This is another area which was touched. Human healthcare service 9993, where healthcare services were under exemption. Healthcare services were not subjected to GST. Now they have proposed that for healthcare services the GST rate is going to be 5%. What is that? Services provided by a clinical establishment by way of providing room other than ICU, critical care unit, intensive cardiac care unit, neonatal intensive care unit. So ICU, CCU, ICCU, NICU. These wards I am not questioning. Other than these wards, if you have a room rent collected exceeding 5,000 rupees, they say per day, per person, then in relation to this healthcare service, 5% is the GST. There was all along debate. Said a patient doesn't go to hospital for the purpose of room service, for the purpose of food service. Earlier there was an attempt made under VAT era to charge VAT on the food supply. Later under service tax era, attempt for room rent charges. Now again this was brought back. How? They say any room rent other than ICU, CCU, ICU and ICU. Other than these 4 wards, if you charge room rent more than 5,000, rate of tax is 5%. Good thing.
Only for room rent or including services, all meters of
The moment room rent is exceeding, healthcare services taxable 5%. All these
For that room,
high drama cases, the moment there is arrest, search, seizure, warrant and all, people get heart attack, people get some diarrhea and all, they go to Nimha, all sort of jugular basic. For them they have a BBAP treatment. They don't get admitted to any of this ICU, CCU or etc. So those admissions, you give a royal treatment, room rent is more than 5,000, charge is state rate of 5% on healthcare service. So this healthcare service, they say, I don't give a establishment, clinical establishment benefit. So in relation to those healthcare services, it is subjected to
5,000 plus healthcare, sir.
bill amount healthcare, Indian healthcare service. I was giving a benefit of healthcare service.
Yeah.
So that healthcare service I have withdrawn.
Oh, yeah.
The moment I have withdrawn, whatever you have charged as a clinical establishment, 5% is the GST.
Includes your nursing charges.
Assuming 10,000,
Yeah.
6,000 is room rent, 4,000 is some medical, whatever you have given.
Okay.
Entire 10,000 I charge 5% GST.
For entire amount it will be charged,
Entire amount.
not on the room rent itself.
Not on the room rent.
So total amount has to be considered, doctor charges, nursing charges.
Everything, sir. In the bill, you see room rent exceeding 5,000.
Suppose they tactfully charge 4,000 rupees rent.
That is what is going to happen.
7,000
That is what is going to
7,000
happen.
rupees medical.
Lawmaker knows how to tax them. Taxpayer knows how to
What's the
change their
evidence?
system. Now, they say 5% you pay without any input tax credit. Now, this argument, sir, should I pay only on 5,000 etc. For that, they have given a clarification. Notification 12 talks about exemption. The moment you charge exceeding 5,000 for any of rooms other than this ICU etc., I withdraw the exemption. For what? For healthcare service. It is no more called as a healthcare service.
Suppose in one hospital, one room is 5,000 rupees.
Now that is another issue I am going to come about. Does not apply to the services provided by clinical establishment. Now this term is little dangerous. They say this entire 12 of 2017 is withdrawn for a clinical establishment. Like sir was giving an example. So let's take ABC super specialty hospital. I have one platinum ward. In this platinum ward, I charge 8,000 as room rent. I have 30 another rooms. I charge 3,000 to 3,500. Just because one ward I am charging exceeding 5,000, the service given as a healthcare to that clinical establishment is withdrawn. Plain reading of this law. That's how I read. That's how the department reads. So we have to get a clarification from the department. Do they want to charge entire clinical establishment or only services rendered to that particular unit?
Long back when hotel industry, this similar issue has happened. For 18%, 28% rate. So what they said is, if you collect 7,500 and above, you have to pay for this rate.
Correct.
Or you are tariff heading that rate card rate,
That is based on room tariff.
room tariff.
So
So
this
same logic I have to use here also.
same logic, the moment the benefit is withdrawn for clinical establishment, whatever healthcare services you render, it is
Got it.
taxable.
So for ITC,
No
ITC
ITC.
not available.
No ITC. Print media, now this is one another entry wherever we have a clients who are into manufacturing this printing service. There was a explanation given with respect to print media. What they are saying, book as defined under subsection 1 of section 1 of the present registration book act but does not include business directory, yellow pages, trade catalog, which are primarily meant for commercial purposes. All these visiting cards, dairy, new dairy and all these days, Printo and all, they were being charging 5%. This explanation has removed this clarification. Book excludes all these printings which is meant for commercial activity. So what is the impact? There is no change in ITC. From 5%, 12% is the rate of tax which is going to be increased. I as a buyer, I can claim the ITC. The service provider has to change his billing 5% to 12%. Now, this is triple R. What is that? Rodram, Rudira, and something else. So that is your renting activity in relation to a residential dwelling unit to a registered person. That's why I name RRR. There is a residential dwelling unit which is meant for residence purpose, which is given to a registered person.
Yes,
so let's remember these three are residential, understood, dwelling unit. Meant for residence, understood, sir. Other than commercial is residence. Given to
Registered.
registered person. Then there is a levy of tax which was earlier 0%, now it's coming to 18%. So what they say, here, say there is a company, XYZ Private Limited. This XYZ Private Limited has got expats who come from, say, Singapore, Japan as a management key people. This managerial people were given rent-free accommodation. So all these days what happens, this XYZ Private Limited gets into an agreement, tenancy agreement with the landlord. Landlord says this is meant for residence purpose, he never charges GST. So though his income is more than 20 lakhs, he never got registered, he never paid GST. Effective from 18 July 2022, they say all those residential accommodation which is meant for residential dwelling unit, which was given to a registered person, you need to pay GST on reverse charge basis. So they have brought in a RCM concept for this particular thing.
Since guest houses, other things will be mostly covered.
Accommodation, which is not guest house is also covered, which is meant for
The company
residence
takes out
purpose.
a lease basis residential building and convert it into guest houses.
It is meant for residence purpose. Again, given to a registered
Registered
person, you have to pay tax on reverse charge
They are
basis.
charged.
But landlord need not worry now.
Landlord need not worry. This is one table I am explaining.
Yeah.
Assuming landlord is unregistered fellow, tenant happens to be a registered fellow. So it is taxable in the hands of tenant. Tenant has to pay reverse charge to the government. Landlord is a registered person. Tenant is also a registered person. So why is that landlord registered? In addition to residence, he may have a commercial activity.
Yeah.
He may have a business activity.
Okay.
So with respect to this property, tenant will pay on reverse charge to the government. Landlord need not worry.
Yeah.
I think
Yeah.
just because landlord is registered, tenant is also registered. Responsibility is not there on the landlord. Responsibility is there on the tenant to pay tax on reverse charge.
Only
basis.
RCM basis, not on the.
Only
not
RCM,
borrowed.
no forward charge. So what if the landlord is registered, tenant is unregistered?
No impact.
No impact. Though it is meant for residential unit, no need to pay tax on forward charge basis. So this is one triple R movie which has come in by way of a withdrawal of exemption under 9960.
Very great.
This particular amendment, if you actually look at the backdrop, there was one Karnataka High Court judgment which I was referring to, this Tagar Ambrish case. Vasudev Ambrish, Vasudev Ambrish. Where Karnataka High Court has said renting of a residential dwelling unit to a registered person meant for PG is deemed to be a residential dwelling unit, no need to pay tax on reverse charge. That particular entry, which was given exemption from Karnataka High Court, was lifted out with this particular notification. There was, in Mahabharata, if you see, when Arjuna was fighting with Bhishma, he knows that he cannot win over him. Whatever you put the tactics, he never can overcome Bhishma. So what he has done, he has taken shelter of Shikandi. From the taking the shelter of Shikandi, when Bhishma dropped his weapons, then he started attacking and he made Bhishma to collapse. What you cannot do directly, you can do indirectly is what meant in this particular entry. Very, very, two entries, entry number 12, entry number 14. mercilessly was withdrawn after this Karnataka High Court judgment has come. This is one thing I can connect with
He
these
has
two.
fighted for
items.
last 7 or 8 years.
Not Senate. It started in 2021, which got 2022 got finality.
No, because coming to High Court, he has to go to CSAT tribunal.
This is an advanced ruling
Advanced
case.
ruling.
Advanced ruling case. But unlawful, where you cannot do directly, it was done indirectly.
Indirect.
Sir, now fees is also to be taxed.
Which one, sir?
Now we are telling, what is it? Fees to be taxed.
PG.
Yeah.
So PG is residential dwelling unit. As of now, no need to pay tax. Residential dwelling unit, it is given to a unregistered person. Like
Not
assuming
temporary purpose.
I'm a student.
His
Ah,
argument.
I'm a student.
Yeah.
If you are giving this residential dwelling unit to a student who is unregistered.
Okay.
No need to pay. Assuming I'll come this way. So my Bosch has got 400 employees who have come on what you call this.
Work from home.
No, you have this contract training as a trainee, industry training they have come. All this 400 he has to give a accommodation. Assuming Bosch has got into contract for getting the accommodation on behalf of those trainees, Bosch has to pay reverse charge to the government.
Okay. Sir, on the individual has given his building to one company. Those who are into that same business,
Unregistered
space
business.
business only, they are running so many, some 6, 7 buildings.
That is subjected to tax in the hands of the recipient.
Okay.
Landlord has nothing to do.
Yeah.
Recipient who is registered has to pay tax on reverse charge.
Suppose April also not registered, assuming that it is a
Nothing to
residential.
do. Nothing to do.
No impact.
It's on reverse charge. So taxable, and the tax needs to be paid the registered person who happens to be a tenant. I'll give another example.
We are providing reimbursement to the employees. They are paying rent.
Rent-free accommodation to the employee.
It will not come to
Contract is with the company or with the
the
individual.
employees.
Then nothing to it. Service is rented to an employee, not to a registered person. Now, all this is a tax money which is
Rent, we are reimbursing them, but they are submit the rent slip.
yes. So nothing to worry. Now the next challenge comes. Sir, I'm an event management fellow. I have a event management in different places. So I take 50 people, my employees, for that particular site. Preparing the site, setting up that temporary structures, arranging food, lot of event management happens. So with this 50 people are my employees. Wherever I go, I have to provide accommodation to them. What happens to that? I have to take a house or some property for residence purpose. Is it for commercial? Not for commercial. It's like an accommodation for the employees to stay. The question comes here. Sir, I as a registered person, I am willing to pay 18% GST. Can I claim the input tax credit? Again, the matter was examined under section 17. If it is meant for goods and services meant for personal consumption, no ITC. This is a matter which got more or less settled under service tax. Any paying guest, any guest house, any quarters given to employees or the other temporary staff, you can claim the input tax credit is what? Settled under service tax. Now that is going to get started under GST law, where these businessmen are going to pay tax on reverse charge. They say, sir, this is meant for business. They say, no, it is meant for personal consumption. No ITC. This is a dispute which is going to again get erupted in under GST.
That is for business purpose only is using.
Sir, I see as a business purpose. They say, sir, it is a residential dwelling unit. It is meant for personal consumption. That's what department argues.
Maybe for personal consumption, we paid the taxes for business purpose only paid.
That is what we have to put across. And the department is going to come with the other astra saying that, sir, 17.5G, it is meant for personal consumption. So that's how they are going to block the credits, 18% what I am going to pay tax on reverse charge. I would recommend clean the ITC, but being prepared for the litigation to come into picture.
Even other case also personal consumption only, any employees of company.
So that is personal consumption.
Yeah.
Now, this is meant for business. Like wherever I have an event, I am taking my employees with me.
Yeah.
That is meant for that event. They say that because the department has got a different view. So all along you are not paying GST. If it is meant for commercial purpose, you should have paid GST. Because it is a residential dwelling unit, it is for residence purpose. I block and the department will be concluding.
Sir. Done?
Yes, sir, yes.
We are into setting up of edible oil extraction and refinery plants across India. We have a customer plant in customer site in Andhra. Our site engineers go there. Normally it will be for months. So they hire, they look out for a residential accommodation. So now that comes under GST.
That comes under GST, reverse charge. We have to pay tax under reverse charge. I would recommend go for an advance ruling. 100% you get an advance ruling. Go to the court and get this matter resolved.
But it's very clear, sir.
One more thing.
See, look at the tax. If the
reinvestment.
input tax credit is huge, better to litigate and get the matter settled in your favor. Because many tribunals under service tax era, they have decided that this input tax credit is in relation to business, you can claim the input tax credit.
Yeah, that is on same basis because the rent agreement will not be in one particular site engineer's name. It will obviously be in our name.
Company name, you take in company name, you pay tax under reverse charge, claim the ITC credit, file advance rule. If you want to avoid litigation.
Okay.
But it is very clear, no, sir. Why advance ruling?
Sir, you take the credit,
Yeah.
wait for 1 year,
Avoiding for
Yeah.
wait for 1 year,
Yeah.
then you will understand. Wait for the departmental audit to come, then you will understand the sounds of
importance.
music.
Okay.
So what kind of queries you anticipate now? Because it is very clear from here by this.
The moment sir, they look, residents. Sir, residents has got nothing to do business. That's how they look.
Without that, they cannot execute the work.
This is the argument you put forward.
Yeah.
Now I'll take a devil's advocate like as a department representative. Sir, it is residence.
Yeah.
It is not commercial. If it is in relation to furtherance of business, I'll give. Residence is not business. I'll disallow. I'll also say, sir, there is entry called personal use. Residence is meant for personal use. The employee is going to stay. Stay for personal purpose. If it is for official, let him buy and pay. Let him take on rent and let him
Civil
enjoy.
issues relating to insurance and employment, insurance premium, GST and insurance.
Insurance, food services, your travel,
Transport.
So I say that it is a credit which is eligible, but department has got legacy from central excise era. This entry, what you have seen, is a legacy which is carried from central excise and service tax era to GST era. So undoubtedly litigation is going to mount.
So you'll be sharing this presentation, right?
Yes. Now, this I was referring to this Tagar Vasudev Amrish case. Bluntly, two entries, entry 12, entry 14, as I said, was withdrawn after this Karnataka High Court judgment has come into picture. Now, postal service, unfortunately, they have touched postal service. They say, I tax entire activities of postal services, barring few activities called postcard, inland letter, book post, ordinary post. Other than these four activities, the rest all activities are brought into GST. Even the services rendered by the postal department to central government, state government, local authority was also subjected to GST. Now, this is one entry.
18%, sir.
Yes, sir, 18%. This is one entry, recreational, cultural and sports services. Look at the old entry, look at the new entry. Any activities in relation to recreation by way of training or coaching in the field of arts or culture. The moment you say arts or culture, it is wide open, everyone who is giving training service. So my kid wants to get trained on cricket. So there is a ground, I take him to the ground, he gets trained. So there is a group of people, association of individuals, unincorporated. They collect as a body and they don't charge GST. It is in relation to encouragement of art and culture. Now, from 18th July, this entry was altered like recreational activities relating to arts and culture by an individual. Only this is exempted. If the services are given, if this particular training is given other than an individual, it is subjected to GST. So all this, I don't know how many of you have seen this APS college ground, APS school ground. Every day this ground is flooded with cricket practitioners. Morning till evening, close to close 500 students come and go. Now imagine the amount of training they do and the kind of billing they do. All these days they were enjoying the exemption. Going forward, you should have individual trainer to collect their money to enjoy this exemption. Now, the most sought topic on pre-packaged and labeled. 18th July 2022, the morning newspaper you have taken, they say, you buy Nandini milk, which is a pre-packaged, pay GST rate of 5%. So to avoid, you take your bowl, go to the Nandini bowl, say, Bhaiya, don't give it a packet, cut the packet and give half liter. Cut the packet and give 1 liter. I don't want to pay 5%. This pre-packaging label has brought so much of disturbance in the business. So they say, this term pre-packaging label was borrowed from Legal Metrology Act. So is this the first time we are depending on LA laws? Answer is no. Earlier under Central Excise, there is a concept called deemed manufacture. Section 4A, they refer to the concept of packing, repacking, labeling, relabeling. All this activity tantamount to manufacture, provided those goods are covered under Legal Metrology Act. Earlier, Weights and Measurement Act. So that particular act, which was drawn under Central Excise, was brought back to GST Act. Now, if you look at all these amendments, people who are from Central Excise, people who have very thorough background on Central Excise who have been promoted to the helm of FIs, they have been started touching excise concepts back into GST. So this term, pre-packaging label, was imbibed from section 2. It says that a commodity without the purchaser being present is packed, is placed in a package of whatever nature, whether sealed or not, so that the product contained therein has a predetermined quantity. So this is a concept of my pre-packaged or labeled. Let's take a couple of examples. So I go to the grocery shop. I want to buy hair oil. Hair oil parachute, it's pre-packed. There is a plastic bottle within which they have put the content. I want to buy atta. I have a choice. I can go for branded. Like if I bring loaves, I know that chapati will become papad. My wife prefers only say Ashirwad atta. So you don't have a choice. You have to get whatever brand it is there. So whatever TV is selling, that product gets lifted from the supermarket. The products which you are purchasing from a supermarket or a grocery shop, which is a pre-packaged, it is labeled. Why? There is a requirement of Legal Metrology Act. Any commodity you are selling in a packed condition, which has got a label, this is 10 kgs, this is 100 grams, this is packed on so and so date, this is a net weight, this is the price, and best before 6 months to 12 months. Now this is all a description which is embossed on a particular product, which is called as a pre-packaged label. So first and foremost, we need to understand the concept, pre-packaged and labeled. It is a packing done before or without the interference of a customer. Customer doesn't go to parachute manufacturer and say, I need 100 ml hair oil. It doesn't say. By default, Hindustan Unilever manufactures and labels 10 ml, 50 ml, 100 ml, etc. So this is the basic thing we need to understand. This is the concept of pre-packaged label as per section 2. Now, moving on to rule 3 of pre-packaged label commodities, they say, look, there are a few activities as per rule 3 which is not falling into the definition of pre-packaged and labeled. What is that? A package or a commodity which is containing a quantity exceeding more than 25 kgs or 25 liters, which excludes cement and fertilizers, sold in bags up to 50 kgs. So there is an exclusion. Wherever I buy a commodity, wherever I buy goods whose quantity is exceeding 25 kgs, this is excluded from pre-packaged and labeled. Sir, I buy Ashirwad atta 30 kgs. Can I call that Ashirwad atta pre-packaged and labeled? Though it is packed, as per rule 3, this excludes from that definition called pre-packaged and labeled. So, cement and fertilizer exceeding 25 kgs up to 50 kgs is included in the definition. So for a simple understanding, any quantity, any product product exceeding a weight of 25 kgs, exceeding 25 liters is not to be called as a pre-packaged or labeled. Are we clear with this?
Yeah.
Packaged commodities meant for industrial consumers or institutional consumers. Like example, when you get onto this Indian Airlines, they give this chocolates, coffee, or they give bun. These are all pre-packaged and labeled. I get a water bottle. I get into this airways, there's a jet airways. They put their branding and give the water. All these are industrial supplies. Industrial and institutional supplies are not forming part of your pre-packaged or labeled. So these are two basic definitions we need to understand. Now, till 18 July 2022, there is a level of GST of 5% on goods which are branded, where the brand has got an actionable claim in the court of law. It has got a power of actionable claim. Take example, Ashirwad Atta. I go to a shop and buy 5 kgs atta. If the seller gives me a packet without a brand, it is not subjected to GST. If he gives me a packet which is having a label called Ashirwad, which is having a trade license, which is having ownership with particular entity, that's called branded commodities. So all the while, only branded commodities were subjected to GST. 18th July, what they have done, I don't want to get into this concept of branding. Let me get into Legal Metrology Act. Wherever a product was sold in a pre-packaged condition with a label, why a label? Because of Legal Metrology Act. If you have sold a packet which is having a label, then it is called as a pre-packaged commodity. 5% is the GST. That is what they have brought into picture.
Label means name of the company.
It contains the details as per your Legal Metrology Act.
In fraudulent stores normally they.
Yes, date of packing,
Yeah.
why is this, what is the weight of content, etc. So if I do the packing at the instance of the buyer, customer comes, I have say 50 kgs of atta. I cut the 50 kgs back, I put into 10 kgs. Customer wants only 10 kgs. I take from pre-packaged, assuming say 25 kgs. I put into 10 kgs or 5 kgs. At the request of the customer, it was packed, then it is not called as a pre-packaged or labeled, no GST. At the instance of customer, I do a packing, then it is not called as a pre-packaged commodity. Input tax credit has to be determined at the time of purchase. Now, I'll come to an Excel file, interesting example, then we'll come back to this. Is the Excel file visible?
Not visible.
Oh, this is in presentation. Is this?
Yeah.
Now should I increase the size or it's clear?
Okay.
Look at this analogy. I have taken a model way this pre-packaged product is purchased by a department store. Department store decides to sell as it is. What do you say? As it is as a pre-packaged and label. Department store decides to sell in loose. I'll give an example. Sir, I have purchased atta 10 kgs. This atta 10 kgs, I have a choice to sell as it is or choice to sell in a loose form. Assuming the price of this 10 kgs bag is 100 rupees. On this 5% is a GST. So why is that GST 5%? Because it's a pre-packaged condition. I as a department store, I buy from a wholesaler. When wholesaler is selling this 10 kgs bag which is not exceeding 25, it's subjected to GST. So 5% is a GST. Now, I call this is scenario A, scenario B. So in case of scenario A, I can take the ITC. Why I can take the ITC? When I sell as it is, it is subjected to 5% GST. My output tax, I collect 5% GST on my sale. In option B, ITC is not available. Why ITC is not available? I cut the pack of 10 kgs, I sell 1 kg, 100 grams, 500 grams in loose. When I sell the commodity in loose, it is not to be considered as my pre-packaged and labeled. Are we clear with the concept?
Yeah.
ITC, it is not available in option B. Are we clear? Now, landed cost for seller. In case of department A, my landed cost is 100 rupees. In case of department B, it's 105. Why? Applying the principles of AS2, I have an input tax to be submitted. So I take the benefit of ITC in case of department A. In case of department B, it is not ITC, it is not eligible. So my landed cost is going to be 105 rupees. Assuming I have a 12% profit margin to be maintained. My selling price in case of department A, on 100 rupees I charge 12% 112. In case of department B, on 105 I charge 12%, which is going to be 170. Are we clear till now? Next, GST on sales price. Department A selling as it is, pre-packaged and labeled, 5% is the GST. So what happens in department A? 112, 5% is going to be 5.6. Department B, because it's selling in loose, no GST is applicable. Net price to the customer. Look at here, 117.6. I decide to sell as it is. I decide to sell in loose. Is there any impact to the customer? So selling price is going to be the same, assumption that both have same overheads, both have same profit margin. So where is the concept of your ITC? Assuming you take a ITC, there should be a reduction of price. Now this is one model thoroughly to be understood before the supermarkets are going to launch this as a business strategy. Now look at this, profit made by the supplier. 100 rupees is the landed cost, 112 is the selling price. It is going to make a profit of 12 rupees. Department B, 170 is going to be the selling price, and not 105 is the landed price. 12 rupees 60 paise is the profit margin. So, if I get into department B model, where I prefer to sell in loose, I make more profits. Now, this is one model. There is a propaganda saying that go to all kirana small department stores so that you will save 5% GST. I would say you will not save anything. You go to a big store or you go to a small shop, price is going to be the same. Now, model number 2. Let's take the other way around. Sir, I have a purchases made without GST. Assuming that there is a department store A, department store B within the same organization. I have purchased rice bag of 100 kgs. I have purchased a rice bag which is to be sold in 10 kgs. Now, department B is into loose. It buys 100 kgs, makes a small bags of 10 kgs and sells. So, in case of purchase price, assuming 25 rupees per kg, my price for both the departments is 2500. GST. To the seller, I don't pay GST because it's selling more than 25 kgs. Input tax credit, nil in both the cases. Landed cost to seller, department A, department B, it's going to be 2500. Standard profit margin of 12% in both the cases, I have to sell it 2800. So far so good? Now, look at here. Selling price per 10 kgs bag. In case of department A, is not selling, is selling as it is. So there is no per bag. It is going to sell at 2800. In case of department B, 2800 divided by 10 packs, so 28 rupees is my selling price. GST on department A, because it is selling as it is, pre-packaged and label, exceeding 25 kgs, no GST. In case of department B, 280 rupees on that, 5% is going to be 14 rupees. So my net price to the customer, in case of A, for 100 kgs, 2800. For B, per bag 294, for 10 bags 2940. Now if you look at this price, 2940 in case of department B, 2800 in case of department A. So how much is excess? 140 rupees is excess. How this 140 has come?
GST.
On 2800, they charge 5% GST. This is going to be 140. So this is a model where at a procurement stage, if you are not paid GST, you have to see, go for selling as it is. If you get into this model, where at the procurement stage I am going to pay GST, decide how to market your product to get a better returns. Right? This Excel also I am going to share for understanding purpose. Now, why is that we have this 25 kgs brought into Legal Metrology Act? Why not 100 kgs? Earlier we had labor, 100 kgs back, labor is ready to lift that. Over a period, they also have become white collar employees. So 100 kgs yaru barodilla. So 100 kgs has become 50 kgs. 50 kgs has become 25 kgs. Now if you see all these big commodities, there was a gradual reduction of labor, considering that this Legal Metrology Act was also picked at 25 kgs. Now, input tax, I would recommend please examine the business model. What is the assessor willing to do? Now, 4 years, 3 years down the line, when the department audit is going to come for the audit, what evidence do I have? Sir, I am a retailer. Did I sold as it is? Did I sold in loose form? How do I prove? Sir, I have sold as it is. Then I will not collect, I have to collect 5% GST. Sir, I have sold in loose. I need not collect any GST. I don't want to claim ITC also. So this is a matter where a shop exists. Commodities are sold with GST. Commodities are sold without GST. It is $1 million question for an accountant to claim the ITC. Application of Rule 42, Rule 43, common credits. There is a big nuisance. There is a concept called Rule 88B where input tax availed and utilized. That concept will be verified. Simple math. We all chartered accountants, when we do statutory audit and all, internal audit, there is a simple math for us to examine. Is the assessee paying output tax in through ITC or paying through cash? This is what we need to examine. If the ITC is getting accumulated, that is an indication that he claimed ITC and he has sold in loose form without charging GST. So he should not have claimed ITC when he is willing to sell in loose. So accumulation of ITC is an indication that what business model he has adopted. Department is also going to question from this particular angle. So what if I have 12%, 18%, 5%? Then again, a tedious job for the department officers to convince upon Rule 86B. There is one rule called Rule 86 which says your input tax credit can be utilized only to the extent of 99%, not 100% for payment of your output tax credit, subject to a couple of conditions given there. Now, this all comes by way for inquiry, audit, scrutiny of returns, section 61 and all. So these are the challenges open in the departmental audits to face. Now, this is one example, and example 2 which I have discussed. This I'll share, and I would recommend please make a study which is going to give wonderful insights.
5% is applicable on all the goods or only for notified goods?
Specified goods in Schedule 1, if you look at Notification 1 of 2017, Schedule 1 has what? Specified goods. Only that way pre-packaged and labeled is there, 5% is brought in.
Vendor is selling in loose label, but due to customer requirement, like in hotels, they ask for their brand and shop name on the packaging and also the date of packaging and the expiry 2 months, 3 months, whatever. That will come under the level.
Package.
Legal methodology.
Even for the sake of the customer, if they are doing.
No, for the sake of customer they will not do. For the sake of complaints they will do.
No, in case of
Usually
bulk
they are purchasing
manufacturers.
50 kg bag. Suppose hotels when we purchase, we ask to provide us a 1 kg packaging.
Okay.
So they put their name.
At the instance of buyer you are doing, then it's not covered under Section 3. You should have pre-packed and labeled without the instruction or without the knowledge of the
Personal
customer.
presence of the
Section 3 is where it comes into rescue. Again, sir, rightly your point is valid. At the time of department audit after 2 years, there is evidence to prove that this was done at the instance of the customer, this was done as a business strategy. As a few places, honey, you have this what you call homegrown, home-based honey, you package and label and sell. No, whenever you go to that particular hotel, they want to give a special touch. So you get a homely vegetables, you get this thing. It's all pre-packaged and labeled. There comes the challenge of 5% GST. Because the scope of GST is widened under Schedule 1.
One doubt, this
Yes, sir.
Rice is sold pre-packed 25 kgs.
If you do
taxable.
deliver-
That is taxable.
That is taxable. Unfortunately, that
Suppose
is
30 kgs means not
it's
taxable.
not taxable.
What's the logic?
So as you know, manpower to lift the bag. I can lift up to 20 kgs. 30 kgs nan agalla. So that's a principle in legal methodology which was borrowed to GST law.
But after 25 kg sold, it is taxable.
Above 25 kgs, no GST.
No GST. Up to 25 kg, it is taxable. But poor people, middle class and all buy 25 or less only.
Unfortunately.
Then why they are taxed?
So in tax matters, there is nothing called sentiment. There is nothing called human ethics or principles.
Yeah.
I have to tax the activity, that's all. And this legal methodology act, like as I was giving the backdrop, someday they have to bring a principle to convince upon. Since there is a legal methodology act, that principle was adopted into GST law. So there is no logic to that. Why legal methodology has said 25 kgs? Rule 3, why there is an exemption? Now this is designed by the policy makers based on the census, based on the inputs given by a steering committee.
Now rice millers, they go on
30 kgs.
30 kg.
Hashtag.
Or 26 kgs.
Hashtag. You buy 100 kgs,
Yeah.
pack it in, like you pack in 5 kgs, don't pre-pack. Customer ಬಂದ್ಮೇಲೆ pack ಮಾಡಿ ಕೊಡಿ.
Yes.
No GST. So put a CCTV to prove that sir, package ನಾನು ಅವ್ರು ಬಂದ್ಮೇಲೆ ಮಾಡ್ತಾ ಇದ್ದೀನಿ. Evidence ಇರಬೇಕಲ್ಲ. Photo ತಗೊಂಡು ಇಟ್ಕೋಬೇಕು. So it's very, very cumbersome, sir. I'm telling you practically, by the time department officers understand these changes, my 3 years assessment would have gone. 74 notices will start. Fraud will fill the statement, suppression of acts. Where is the suppression? In my financial statements, I cannot put the pictures that this is sold in loose. How do I show my financial statements? How do I prove that this is sold in packed condition or loose condition?
In the first place, how do I make my this grocery shop people understand all this?
Yeah.
Professional itself, it takes a while. Morning when I was doing this Excel file, I was confused. In model number 1, both the cases I have same selling price. There was no change. After taking the input tax credit, there should be a reduction in price. But customer, there is nothing change. Profit for the second fellow, department is increasing without GST. So it took a while to understand where is a loophole in the law. Now once we sell this, now you go to any department store, they'll say, sir, if you buy packed and labeled 5% GST, the moment you say 5% GST, bad lose good. Unfortunately, that fellow is getting 60% extra more than the with GST. The government will not get anything. So rate changes for goods, we have another 15 minutes, another 5 slides a day. There is a new schedule called schedule number 7 was brought in way 0.75, 1.5% was the rate of tax for special precious stones. Synthetic stones which are precious like diamond stones, there was a rate of tax pegged at 0.75%. After looking at this entry, I felt really bad. Curd, milk, buttermilk,
5%.
which is a need, not a want. Synthetic stone, diamond, it is for super luxury. You have packed, 1.5% is what you have fixed, 5% is what you have fixed on the goods. Truly way of classification.
It's very cruel.
Look at, I have brought only 3 entries where this 5% effect was brought in. Curd, lassi, buttermilk, Nandini, already subjected to GST. Jaggery of all types, including cane jaggery, good jaggery, which is pre-packaged in label, Kandasari sugar. Puff rice, commonly known as muri, flattened or beaten rice. Now, these are basic needs. So
Some cottage industries, no, sir.
if you go to Odisha,
Yeah, cottage industries.
which one?
That's all cottage industries.
Cottage.
Jaggery.
Cottage.
Cottage, okay.
Cottage industries. For them also tax.
Puff rice, Odisha is one of the staple food. For us, at least we do once in a while. Daily rice, 5% GST is truly living. You should know the ground reality. Increasing 5%, what is it you're going to earn? Next.
50.
Section 15, subsection 3, this was a new entry which was brought in retrospectively. I'll give you a little backdrop and then I'll explain about this 50 subsection 3. We say Moh Maya. When we see James Bond movie and when we get inspired, thrilled and take the bike out or car out, within the next minutes, 5 minutes, we will see the hospital which is near to our home. It never happens. The way he drives his bike, he drives his car. GST, when it was introduced, GST 1, GST 2, GST 3, everything is automated. So our 1 file ಮಾಡ್ತಾರೆ 2 ನಲ್ಲಿ ಬರುತ್ತೆ 2 ಇಂದ 3 ಬರುತ್ತೆ automatically tax ಕಟ್ಬಿಡೋದು ಅಷ್ಟೇ. So hoping that 1, 2, 3 is going to come, 50 subsection 3 was brought in where 24% was the rate of tax. What they are saying, you as a buyer, you claim input tax credit more than what is there in GST 2. On the other hand, you as a seller, you have charged GST but not paid that to government. So these principles were brought in where 24% was a rate notified matching principle. Government also felt 1 ಆಗೋದಿಲ್ಲ, 2 ಆಗೋದಿಲ್ಲ, 3 ಆಗೋದಿಲ್ಲ. Instead of 2, 2A was brought in. Instead of 3, 3B was brought in. So they felt that GST is not going to support. Better you scrap 50 subsection 3. Where that matching principle, section 41, 42, 43. 41 talks about provisional credit. 42 talks about ITC only when supplier is filed. 43 talks about output tax when supplier has defaulted. 42, 43 was removed. It is obsolete. That point in time, government felt, let me use this entry. Why do this? So there is an entry 53, let me use. They have changed this nomenclature. Input tax credit wrongly availed and utilized. There is a penal provision section 122. Under section 122, penalty is applicable. Input tax credit wrongly availed or utilized, there is a penalty. Language they have used, end or. So if you have availed the input tax credit wrongly or utilized, end at the hill 10,000 or 10% of the tax or equivalent to the tax availed. There are multiple provisions. So penalty they have covered. Now they wanted to have interest. So if you have claimed the input tax credit and you have utilized that input tax credit, you pay interest under 50 subsection 3. Why? So there were many clerical errors in the initial days of GST law. By typing, instead of punching 18,000, 18, accountant type 81. Clerical error. Now there was an excess credit availed to the extent of 60,000 or 61,000. So why you have taken? So it was clerical errors. Have you utilized that credit? Yes sir, I have utilized that credit. So till you reverse that excess credit of whatever 60,000 is there, you pay interest. Why? Because you have not paid tax to that extent, you pay interest at the rate of 18%. 50 subsection 3, though it refers 24%, as of today the rate of tax interest rate is 18%. So here, I'll show one more Excel file. Quite interesting, these provisions, lawmaker looks only one side of the coin. It doesn't look at both the sides of the coin. There's one provision called section 49 which deals with your payment of taxes. When I pay my taxes, it says IGST exhaust money, ಆಮೇಲೆ CGST, ಆಮೇಲೆ SGST. When this rule 88B was brought in for the purpose of recovering interest, they didn't thought, how should I recover? This is one example I have given. Let us look at this way. For the month of January 18, this is my closing balances in my credit ledger. CGST 18,000, SGST 18,000. In the month of January, my accountant did a mistake. He claimed 1,000 rupees excess input tax credit. Now, was this 1,000 rupees excess claim, was this utilized? Was this 1,000 excess claim, was this utilized in January? Answer will be no. Sir, I have claimed 1,000 rupees excess credit. I have a closing balance of 18,000. If you remove that 1,000 rupees, still I have 17,000. This logic holds good? No. Similarly in February, sir, my ITC and CGST is 26,000. My accountant took a credit of 2,000 excess. Now, have I utilized this excess credit? Answer is no. In the month of March, again he did a mistake of claiming 2,000. Has he utilized this credit?
No.
So if I remove this 2,000, there is nothing existing. Now look at here. 5,000 is the total credits he has claimed. How much is your closing balance?
6,000.
Did he utilize that credit? Answer is no. Now look at your April. 14,800 is closing balance. Again he did a mistake of claiming 500. 5,500 is excess claim. How much is my closing balance?
14.
Did I utilize my credit? No. Now, look at the month of May. 4,500 is the closing balance. How much is excess available?
5,000.
Did he utilize that?
Yes.
Yes.
Answer is yes.
To extent of 1,000.
To the extent of 1,000. Now, 88B, rule 88B says 4,500 is your closing balance. You have claimed 5,500. Pay interest on that 1,000 rupees. Recover that 1,000 under section 73 or 74. This is the logic department is saying. Now, should I pay interest on that 1,000 rupees? Look at this 9,000. I have claimed excess credit, H2 5,500. Sir, I have 9,000 to pay that 5,500. Now your section 49 says, whenever I have to reverse, whenever I have to make the payment, look at your this DRC 3 challan. When I have to make the payment to DRC 03 challan, first IGST exhaust ಮಾಡಬೇಕು, ಆಮೇಲೆ CGST, ಆಮೇಲೆ SGST. So when I have a credit of 9,000, how can you say this credit was excess? Doesn't make this logic. So this is again a lacuna in drafting where they are not understood the holistic way of section 49. As of now, layman's language. The moment you say 5,500 and closing balance of 4,500, naked and 1,000 kadbudi. So what if it is going to be in lakhs? Assuming this is 45 lakhs and this is 55 lakhs. On 10 lakhs from 2018 till 2022, on 10 lakhs, 36%. Going to be 3.6 lakhs. Incentive of accounts department. Internal audit fees. So this is the kind of exposure revenue is having, not applying section 49. So this department audit statute issuing notices under 53, I would recommend don't blindly accept this principle. Please tell them, sir, you apply section 49. Look at my IGST, CGST, SGST. If the entire balance is exhausted, then I am ready to pay interest. Otherwise, no. Because you brought in this principle. I want to pay CGST to CGST. I want to pay SGST to SGST. But you are the person who said first you set off IGST. Then you set off CGST. Later you set off SGST. If you have let me my own way, I would agree to your principle. When you have made me to follow section 49, please adopt section 14 here also.
So put it on a total figure and then show it to them.
They don't agree. You show, they will not agree. Now, this is one interesting provision. Section 168A, which refers to force measure. This section 168 was introduced after COVID has come into picture. All of us became intelligent on this term called force measure. Whenever we look at the rental agreement, etc., looking into force measure, we say we need to pay rentals. Saying etc. This is God of act of God, like this movie.
Oh my God.
Oh my God.
When
Similarly, 168 has brought us and taught us that period of limitation was there. Now, department said for conducting audit under section issuance of a notice and order, there is a time limit. Section 73 and 74. 73, where tax has to be recovered or input tax credit availed and utilized has to be recovered without fraud, willful misstatement, suppression. Time limit is 3 years. Under section 74, time limit is 5 years. Technically, for financial year 17-18, 6 February 2022, was the deadline to issue a notice under section 33. We are in July 2022. So COVID ಬಂದಿದೆ, ಎಲ್ಲರೂ ಮನೆಯಿಂದ ವರ್ಕ್ ಫ್ರಮ್ ಹೋಮ್ ಮಾಡ್ತಾ ಇದ್ರು. ಸರ್ ಆಡಿಟ್ ಕೇಳಿದೀವಿ, ಅವ್ರು ಕೊಡ್ತಾ ಇಲ್ಲ, ಕೊಟ್ಟಿದ್ರೆ ಸೂಪರಿಂಟೆಂಡೆಂಟ್ ಆಫೀಸ್ನಲ್ಲಿಲ್ಲ, ಇನ್ಸ್ಪೆಕ್ಟರ್ ಆಫೀಸ್ನಲ್ಲಿಲ್ಲ. They have same sort of stories. So government felt, let's give an extension. So for audit for financial year 17-18, any order to be passed, they have extended time limit till 30th September 23. So they have given beyond 1 year. Similarly, recovery of erroneous refund. Any money which was refund given back to the assessee, they have excluded the period 1st March 2020 to 28th Feb 2022. I'll show you an Excel file how to calculate this. Again, this is little interesting. Assuming I have filed a refund for financial year 18-19. My refund for financial year 18-19 was sanctioned on 30th June 2022. Now, technically, this is sanctioned on 2019. My refund was sanctioned on 2019. In case if this was error, the time limit for the department to recover that erroneous refund was 30th June 2022. This is a 3 years time limit. So what they have done, they have issued a notification 13 of 22 saying that March 20, 1st March and the 20th February 2022, you have to exclude. Why you have to exclude? There is a Supreme Court suo motu order where they say you exclude this period from 15th March 2022 till 28th Feb 2022. Based on that Supreme Court suo motu order, this notification was brought in. So for the purpose of calculating the 3 years, they say 30th June 19 was the original refund order passed. Till 1st March 2020, 245 days. Exclude the period between March 20 to 20th Feb 2022. This period you have to exclude. So once I exclude, for 3 years, I will be calculating the remaining period. From 28th Feb 2022, the time limit is till 27 June 24 to pass an order to recover that erroneous refund. So what is happening? Department got so much of time to recover that erroneous refund. So is it unfair? Don't worry, it is not unfair. Department also has given a favorable thing. So what if I have filed refund application belatedly? Same funder they have given you. If you file your refund application belatedly, I'll give you a benefit of excluding this period 1st March 2020 till 28th Feb 2022. We have seen many refund applications which are rejected because you filed beyond 2 years. For that, we have to refer to this notification 13 of 22 and say, sir, 1st March 20 in the 28th February 22, you have to exclude. Then you calculate your period of limitation. Now, last topic, we'll come to the GSTR 3B. There are a couple of changes suggested for GSTR 3B. News is there that in the interest of public to do so, they have made a recommendation for simplifying 3B further. So whenever they say simplification, understand how it is going to be. Annexure 1, Annexure 2, Annexure 3. Someday 2020, they have brought in Annexure 1, Annexure 2, Annexure 3. That principle is going to come back to GSTR 3B. So first thing, they have brought in this table 3.1.1. This is related to e-commerce operator. What they are saying? Any supplies which are made through e-commerce operator, like example, Swiggy, Zomato. 1st Jan 2022, we have seen this notification where they say, I being a hotel fellow, if I have supplied food through Swiggy, government feels that I am not paying the tax, so they have put burden from me, shifted the burden from me to Swiggy. So I as a hotel fellow, I will sell food through Swiggy. They have brought in this new table saying that Swiggy will show his value of collections on behalf of Praveen. Praveen will show how much he has sold through Swiggy in this table called 3.1.1. All this hotel business, wherever they were dealing with, this is a new complaint which is going to come from July 2022. Next, table 4B, ITC reversal. Now this is another nonsense and nuisance. They wanted to bring a new terminology called ITC others and Rule 38. Reversal under section 17 subsection 5. So So earlier under table 4D, we were showing this ITC reversal 17.5. Now that was brought to table 4B. So what is happening? Whatever credit is auto-populated. Now if you look at your table 4A, all other ITC, I have credit auto-populated from 2B. They want to say, don't touch that. Now they want to freeze that figure. Whatever data is coming in 3B, that is table 4B, it will be there as it is. You fill table number 4B, saying how much is the credit ineligible under 17.5. Total your catering credits, your renting cab service, or any other accommodation which is restricted, insurance. So they wanted us to fill the data in table number 4B.
So what if the amount is on the higher side?
Negative. Now that is under proposal. If the amount is under higher side, it is going to be negative. That gets added back to your output credit, output tax. Last, table number 4D. So this table 4D, they have brought in a new terminology, ITC reclaimed, which was reversed under 4B2. This ITC reclaimed, now this is one new entry they have made it. Whenever you file your refund application, the adjudication authority says, why you need to file refund application? You could have filed a claim the ITC in 3B. Sir, I have reversed ITC of 18,000. Instead of reversing 8,000, I have reversed 10,000 extra. So I filed a refund application to claim back that 10,000. So adjudicating authority for them to prove, to do the education process, definitely it is cumbersome. So that's why they have brought this table number 4D saying that if you have reversed erroneously, claim back in 4A5. Now which is not going to happen manually, I have to do manually. If I do manually, again a show cause notice is going to come under section 61. See, auto-populated is this credit, you have taken so much credit. There is a mismatch between these two. Explain why this credit should not be recovered. This table number 4D also asks for information for ineligible credit under 16.4. 16.4 ITC, there is a time limit of 9 months from 6 months from the end of the financial year. Now it was extended till November. Now, why do I show this credit? If I enter any amount in 4D, it is not going to alter my ITC eligibility. If I fill, nothing is going to happen. If I don't fill, nothing is going to happen. Why this information is being asked is not substantiated. So this is one more change proposed in my table number 40. With this, I come to the end of my submissions on recent amendments. Any questions are there? We will take up further questions. Everything is clear?
Very clear.
You asked the questions in between itself. Disturbed your class.
We got perfect clarity.
Good.
The only thing is, sorry, as you suggested earlier, on rental accommodation provided to our site engineers,
Yes.
we should start paying the
You
GST.
should start paying GST on RCM basis.
On the rent, monthly rent we pay.
Yes, yes. From 18th July it started. If you get the bill end of July, pay tax on the discharge basis.
Till 18th onwards we have to pay or first to 17th?
Even I have that question.
Do it on a proportionate basis, but supply for a period that happens from 1st to 30th, 31st. So you can actually conservatively take from 18th to 31st only that 17
But
days.
the other access, because whenever they continuous of service, 30 days is a billing period.
Correct. Continuous supply service, there is a like you have an invoice to be issued or payment of receipts of payment, etc. But in this case, levy brought in only from 18th July,
Mid of the term.
mid of the day. Again, to counter back to your question, you remember 9.4 and UID purchases. There was a withdrawal of UID purchases effect from 13th of October. So what happens? Should I pay till that 12th October or should I completely withdraw that? So answer, once it is levied from 18th July. Conservatively, you claim the ITC, pay that tax and claim the ITC.
Input credit is available. I pay and
Input tax credit is not easily available. Available subject to litigation.
Litigation.
Take a cautious decision.
Sir, rent is always paid in advance. Why will wait, the owner will wait for another 1 month?
There is no,
For July month, I would have paid in advance.
So-
That's how the concept works.
So there is no self-tax invoice for July. For August, you will start issuing self-tax invoice. My tax invoice was issued on 1st July. That point in time, there was no levy. So section 14 comes into picture. Invoice, payment.
Both are-
Both happened prior to change, no GST.
That's a valid point.
They are not updated.
So,
They expired.
ideally from 1st August, what invoice or rate that I paid,
Yes.
on that I will have to reverse.
Again, also install that. Or else.
Pre-packaged and labeled, one cautious thing, we have to carefully watch the business and take a decision whether to sell in loose or to sell in pre-packaged.
All records are.
Thank you.
Thank you so much.
Thanks, Praveen.
Thank you, Praveen, sir. Of course, definitely I think it was a value-added session and it hope our members, kitty, knowledge kitty has increased post this and probably certain confusions also, considering it's yet to be effective and we have to see how things will go further. Well, on behalf of panel branch of SISC, I thank you for taking your time out and making it convenient for yourself to come here and address our members. I request senior member Mohan Raj sir to just come up with us and hand over a memento to our speaker today.
It was a great learning. Within 3-4 days, compiling all these things, doing the analysis, pros and cons, analysis, very easy.
For you, it takes out 3 to 4 days. For others, it takes out 3 to 4 months.
Also, thank you members for making it convenient to attend the session. Of course, I do understand a lot of sessions will going to be physical. So also I request everyone to once again to register for the state level conference, which is scheduled to be held on 19th and 20th of August. Thank you for making it convenient. Good night.